Without a doubt, 2023 is the year of uncertainty. Bank failures, runaway inflation, geopolitical tensions, and opaque Fed policy have created reluctant financial markets. As Q2 comes on, there are many more questions than answers. Perhaps week 15 will bring us some much needed clarity. Hello and welcome to the second full trading week of Q2 2023. I'm Shane Vernier, trading coach at howtotrade.com. The coming 5 days on the markets are full of key economic events, the headliner of which is US CPI. However, we also have an FOMC minutes release, a WASD report, an OPEC report, and an interest rate announcement from the Bank of Canada to contend with. To say the least, opportunity will be afoot as the markets digest these vital underpinnings. The periods immediately following holiday weekends are often active. Let's set the table for your post-Easter trade with a look at this week's headline events and markets.
All right, the week gets underway on really an interesting note. We're coming off that Easter weekend. We're not really sure if there's going to be a ton of volatility or a ton of participation in the market on Monday. Easter Monday is still sort of a holiday in a lot of municipalities and a lot of regions in the world. So we're going to have a close eye on participation and liquidity, really going back to Sunday's electronic open here in the States. Now, the pair that I'm going to be looking at there on Monday is this Euro Great Britain Pound. We sort of have a real rotational pattern going here. It's sort of a channel. An incredible amount of trade is taking place right there from the 3rd of February, in that swing low right there, the 15th of March. So you got about a 2-month range here. Really a nice defined channel. Some of the areas there, I would be looking at topside resistance setting up somewhere right around 88.50, maybe 88.25 to 88.50 may give us possibly an early week to sell. And then you look at the bottom of this zone right down there at 87 to 86.75, really a nice support zone and a support area that coincides with the bottom of that channel. Now, if you do take a good look at sort of how to manipulate the channel, you could bring it up just a little bit. And if you wanted to do that and sort of shrink the size of this channel, you could definitely do something like that and maybe have an area right up around 87 flat is being hard support there. So for that Euro Great Britain Pound, sort of in traditionally a rotational pair, an interesting channel right there. And we've got some interesting support and resistance levels according to that upper and lower trend line. Now, Tuesday is a fantastic day on the markets if you're an ag trader. The monthly WASD report is due to hit the news wires, and it's always a big-time event. So if you're looking to trade ag commodities, the WASD report, that WASD, the World Agricultural Supply and Demand Estimates, that's always a big market driver released by the U.S. Department of Agriculture. Many ag traders will be in the markets on Tuesday. So we're going to look at cash corn right here. This is just a cash corn CFD, and this is the weekly time frame. Now, if you notice that we have a real stiff uptrend, really a nice lower downtrend, an uptrend line right there on the weekly time frame. Now, we've connected probably 3 weeks, and you'll see that this week we've actually seen a reversal from this bullish trend here of the last 3 weeks. So we're looking at maybe cracking that trend line. And if we go down to a daily chart, you'll see exactly what I mean. On the daily time frame, you have a nice defined lower, sort of an uptrend there. A lot of folks connect higher highs to the top side of the uptrend. Personally, I prefer lower lows if I'm looking for a support zone, and it goes back to what we just drew on that Euro Great Britain Pound, sort of a channel type of a motif. But when I'm looking at something like this, as soon as price breaks beneath that lower trend line, we're already thinking we're bearish, and we get some confirmation here, some confirming indicators, really going back to we've got a 50 period moving average and a 200 period moving average. Now this is the daily, so that's a 200 day and a 50 day, really a traditional way to look at a lot of different things, everything from stocks to commodities, is this combination of moving averages. Well, we had our last crossover was back on the 11th of August 2022, and you'll notice since then we had a bit of a rally, but we've been in bearish territory beneath that 200 a vast majority of the time. You'll see we had a hard strike last week, Monday the 3rd. Boom, took out that 200. Quick reversal, and now we've got this daily downtrend broken. So I would be looking more along the lines to the bearish side of this corn market, but be ready for anything on that WASD report. If we see really some incredible misses in projections or incredible adjustments to what we're looking at in corn, be it planted acreage, we're getting into that time of year where we're going to be starting to talk about planted acreage a lot. So what do our planted acres look like? What are our weather patterns here in the United States looking like? That'll have a tremendous sway on the corn market. So we're going to be watching that very closely on Tuesday. Remember, World Agricultural Supply and Demand estimates. Those are due out on Tuesday, big time market mover. This corn market is going to be an interesting one to watch. Last thing that I would definitely keep an eye on if I was trading this was we've got a couple of multi-year lows. Realistically, we have 2023's low right down there at 608.85, and you've also got 2022's low coming back from the 18th of July there, the week of the 18th of July, and that low is 582. So I'll be watching this 600 area very, very closely. If we get a big-time market mover, maybe a surprise in the WASD, perhaps we test that zone. All right, the next thing up on Wednesday. Wednesday's the highlight, maybe the red letter day of the month as far as economic news is concerned. We have U.S. CPI due out, and then we have the FOMC minutes due out. So that is a 1-2 punch that we typically don't see. Usually CPI is due out on a Tuesday or maybe a Thursday, but this month it's fallen on a Wednesday. So inflation has been the number one market driver globally for a long time, and now we're starting to talk more about bank failures and pressure on the financial system as a whole as being the premier market driver. The FOMC minutes, they will talk a little bit about the bank failures, but those CPI numbers that come out during that pre-Wall Street open, those numbers have the potential to really drive markets directionally, so we have to be aware of them. Just a few projections here. Core CPI month over month for March is due to come in at 0.4% expected, down from 0.5% previously. And CPI month over month for March, we're looking at 0.3 expected, down from 0.4 previously. So the markets are expecting a little bit of a pullback here in recent inflation, or our inflation levels here in the United States. We'll see if we get it. So the number one market I'll be watching is this DXY, this US dollar index. For me, this is sort of just an open and shut case. If you've watched any of my live streams, then you'll know exactly what range I'm going to point out already. But you've got a really 2023's range says it all. You've got a spike low back there for February. Your low of February is 182, and then you've got a spike high there for March, and your high up there is 105.86. Until proven otherwise, 105.88. Until proven otherwise, I would have a rotational strategy in place, and that means that perhaps bidding 186 or 101 flat is a pretty good idea, and selling 105, 105.98, maybe 105.80, 105.75. That's a good idea as well. So the idea would be you buy the down really the bottom of this range, and you sell the top of this range. That's a reversion type of a strategy with your profit target somewhere in the center of this range. I think that's going to be a pretty good trade. Now remember, the beauty about such a strategy, a reversion strategy, is if the market does break out, if it does break to the bull, or if it does break to the bear, you're only wrong once. So you take your stop out and you move on. So that's going to be an interesting range to watch. If in fact we do see the dollar do something, it hasn't done anything in 2023. If we see it do something, it will originate in this range, and you will either see a break and a run beneath that zone, or a break and a run towards these highs. Your highs are up there right around 115, and your lows, I would be looking at January spike low at 94.62. Do we make a big move on this CPI FOMC minutes release? I'm skeptical. I think we're in for more chop, and until we see something really definitive out of the U.S. Federal Reserve, I would expect this to move sideways. All right, on Thursday, we have an interesting report. We have the OPEC monthly report due out. Now, typically, I view the OPEC monthly report as being sort of a throwaway report. I don't really see much value in it, and we don't typically see huge moves on the OPEC monthly report. Now, our EIA reports that we get every week, that drives action to the markets, and also when you see a surprise news item out of OPEC or OPEC Plus, like we saw a few weeks back on a Sunday evening, early in the UK session, Sunday evening here in the United States, they announced that they were going to cut production by 1.16 million barrels per day, and it sent oil gap up. Well, this is exactly the reason for this formation, and exactly why we've pointed it out. Now, this is a very rare formation here in U.S. oil on the daily time frame. This is an island reversal pattern. Now, I've been trading crude oil for quite some time, about over a decade now, and it's hard for me to figure out, or at least go back in my mind's eye and think, when was the last daily island reversal pattern I saw in WTI crude oil? And we don't typically see this pattern. Now, if you've never heard of island reversals, we have some resources here just in the trading room that can actually help you trade an island reversal and all sorts of chart patterns exactly the same. If you go to the homepage here, How to Trade, you click on Resources, you just go right down to Chart Patterns, and we have a robust collection of chart patterns, really everything you can think of, inside bars, inverse cup and handle pattern. This particular pattern is going to be on page 6 here, and you're going to go right to island reversal, click on that. And here you have everything you need to trade the island reversal pattern. We got some pretty good stuff here. We've got diagrams. You know how to, by the end of this, you'll understand how to balance risk to reward and actually execute a trade on this, what we would call an island top reversal pattern. So this is an interesting type of a pattern. It's one that I haven't seen very recently. So be sure to check out that resource on the homepage here. So essentially, we've got a 4-day consolidation pattern. Good Friday. Crude oil was closed. So everybody's on the edge of their seats for Monday's open. According to this island reversal, you're going to be seeing a big pullback in price. Now, will it happen? Will it not happen? We've got a lot of factors at play. I won't really speak to that, but at least according to that pattern, you could see some bearish price action and maybe filling in this void somewhere beneath, I would say beneath 78, but above 76, 75. So this is fascinating. This is something I'm going to be watching with great interest. And the week wraps up with U.S. retail sales. Now, retail sales is one of those metrics that we don't put a tremendous amount of stock in, or we haven't been putting a tremendous amount of stock in. But the problem right now that traders are having is we can't decide if we're going to go into a deep recession, a slight recession, or really a cataclysmic type of a financial crisis here in 2023. And retail sales suggests that consumption. We're looking at the consumption end of the equation. We're looking at consumer sentiment. We're thinking, okay, what does the average consumer think? Are they spending money? Are they not spending money? What could this mean for us down the line? So we look at our retail sales numbers, and they do have a bit more meaning now. So I have them listed as really a primary market driver for Friday's session. You can see right here we have a few projections. Core retail sales month over month for March, we're looking at negative 0.1% expected, the same as the previous release at negative 0.1%. And also retail sales for March, you're looking at negative 0.3 expected, down from slightly up from negative 0.4 previously. So that's sort of a fascinating look at what we can expect. Those projections are not good. We're not looking for positive retail sales. We're still looking for that consumer to be awfully leery about what's happened policy-wise. So that fascinating look. I'm expecting a big miss there on retail sales. Keep a close eye on that number to end the week. The market that I'm going to be looking at is the U.S. 500, the S&P 500. And the reason why is we're exceedingly tight. Much like that U.S. dollar index, you'll notice that we are extremely tight here for this year on that U.S. 500. We've gone 251 points, and it's just been a whipsaw range. I mean, you can see really going back to there's January's range, February, March, and now you can see April beginning. What's going to happen? Well, eventually we're going to have to break, and this is a fantastic example of a bilateral rectangle. Now, what that formation is really indicative of a market coiling up, and we have a pretty good idea that the market's going to break out. Now, what we don't know is it going to go to the bull or to the bear? So when we look at a pattern like this that's a bilateral pattern, we don't really have any sort of bullish or bearish bias. What I would be looking at right here is potentially buying above the top of 2023's range at 41.95, or selling beneath 2023's low, which is right in here in January, and your low right there is 37.92.5. So you could sell beneath that breakout. You could buy above that top line playing a breakout. The bottom line is this: you're looking to buy above the range and sell below the range, with the idea being that the market is actually going to move. That's a fantastic example of a bilateral rectangle, really going back to even last December, and you could even include last November inside of the rectangle if you'd like. So very tight action here in the U.S. 500. Will we break out this week? It definitely could happen. We have a lot of market drivers out there. That retail sales number is going to highlight late week trade, but the keys to this week are U.S. CPI and those FOMC minutes. So stay on your toes if you're going to trade this week. Stay flexible. Remember, don't go chasing price. Stay disciplined. Get good trade location. Make sure that you trade with precision and discipline, and that's what makes you better than the competition.
This is a big week on the markets. Headlined by U.S. CPI, we should see significant action across all asset classes. Whether you're trading live cattle futures, crude oil, or the Euro-US dollar, there will be more than a few opportunities to trade. Are you ready for the action? Now be sure to drop into the trading room for everything you need to stay on the market's competitive lead lap. Featuring trade ideas, live streams, and educational content, we have the resources that can help you engage the markets on your terms. And don't forget about our Trading Academy. With new modules being released regularly, there is a robust, growing catalog of fresh content at your fingertips. Confused about an Academy module? Drop by one of our Academy live streams for a truly interactive educational experience. Ask Connor, Nick, or me anything you like. We don't mind. Until next time, trade the action well, and we'll see you on our next live stream.